Welcome back to Chapter 9. We're now going to take a look at some technology developments and how they have impacted on the accountancy profession. So technology has been developing rapidly over the past few years, and historically a big part of the accountant's role was to collect and record a lot of transactional data. But now with the recent advances in technology, a lot of these more basic functions can be performed automatically by computers. So what that means is the accountant's focus has been shifted onto what we do with that data once it's been collected. So what we're going to do here in this section is we're going to have a look at some specific technology developments, and we're going to see what impact they've had on both accounting and auditing. So the first table we've got here is looking at some technology developments and their impact on accounting. So we've got here, first of all, we've got automation, machine learning and intelligent systems. Now we've already talked through these concepts, so if you need a bit of a refresher, have a flick back through your notes to chapter 6 and look at section 4.5. But for now we're going to talk about their impact on accounting. So what we're talking about here is the fact that these developments mean that transactions can now be automatically recorded by computer. That means that ledgers can also be maintained and reconciliations can be performed. Now these tasks used to have to be performed by the accountant, so now that they're being done by computers, it means the accountant has more time to spend on other areas of the business. The next technology development we've got there is the more powerful systems. So this is referencing the fact that computers are now much quicker at processing data and also sharing data. So when you have to upload files to the internet, for example, now the files upload very quickly, whereas previously it took a long time to update a relatively small file. The next one we've got there is system innovation and applications. So this is just referring to the fact that new uses for technology are being discovered all the time. And our role as accountants is we may have to advise our clients on how to use the new technology or how to account for the new technology. So for example, when HMRC brought out their Making Tax Digital scheme, we had to advise clients on how to comply with the new scheme. So the next technology development we've got there is digital contracts and transactions. So these are just new ways of recording transactions. So we've got a couple of specific examples here. The first one is self-verifying smart contracts. Now a smart contract is a piece of code that uses blockchain to enforce the terms of the contract as soon as predetermined rules are met. So we as accountants just need to make sure we're accounting for these correctly so that both parties to the transactions recognise the same level of costs and revenues. Then we've got distributed ledger technology and triple entry bookkeeping. Now triple entry bookkeeping still uses the same debit and credit that we're used to seeing with our double entry bookkeeping, but then there's a third entry that also gets posted into the public ledger that we need to be aware of as well. Then over the page, we've got our next technology development, that is the new types of data, information and risk that we might be exposed to. So this just means there might be things that we've not seen before, so we've just got to make sure that we apply sound judgment when deciding how to account for these things that we're seeing for the first time. Developments in technology will have also led to new types of goods and services being discovered, and organisations who either produce and sell these goods or services or buy in these goods and services will have to know how to account for these. Now a good example of this would be the digital assets that we spoke about in chapter 6. Then our final development in this section is looking at the increase in the transparency in the recording and the sharing of the data. And this just means that there is more data in the public eye than ever before, so we as accountants have to be aware of that. So this next section we've got here again looks at some different technology developments, but this time considers the impact that they have on auditing. So the first one we've got here is audit analytics and intelligent systems. Now these systems can be used by the auditors to perform the checks on the organisation's data on behalf of the auditor. So that means that these transactions can be audited automatically and on a continuous basis, again freeing up the auditor's time to concentrate on more difficult areas. These technologies can also be used by organisations as part of their internal audit mechanism, because the technologies get embedded within the entity's accounting system, which can lead to greater reliance on the internal audit function by the external auditor. So the next technology development we've got here is the smart contracts again. So this is where, if our clients are using smart contracts, us as auditors need to check that they are accounting for these contracts properly. Now this check can take place as the contract is being created, before the transactions under it have occurred, or after it as well. So the next one we've got here is data analytics. Now auditors can use these data analytics and apply them to sort of large chunks of client data, and it helps them to target risks, because what it does is it spots breaks in the patterns of data and helps to potentially spot fraud or error in the data. So the next one we've got there is software controls and data sets. So this is just going to come within the auditor's compliance testing, so testing of the entity's internal controls. We're just going to focus on the controls that feature within the accounting software, and then on interpreting complex data sets as well. The next one we've got here then is our distributed ledger technology and our advanced accounting system. So this is where we've got data that's shared across lots of participants over a network. So this increases the reliability of the data, which reduces the need for auditors to audit transactions and verify the ownership of the assets. And then finally here we've got a little bit on regulation. So this is just referring to the fact that the regulation surrounding the audit profession is going to have to be updated to reflect all of these developments, to give the best guidance to auditors on how they should act in these sorts of situations.